The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grandy.
And of course, the economy as of now is quite strong, led by the consumer.
Led by the consumer. Are you kidding me? Are you kidding? Are you nuts? The consumer saying he's having a terrible time. 40% of consumers saying this is worse. They're worse off now than they were a year, even 2 years ago. And I believe that. This is crazy to come out and say that. You know, today it's interesting. What an interesting day we have today. I've been telling my gang, and I think I told you, my listeners, that last week, after the S&P broke the 200-day moving average, well, first of all, I've been saying we need a rally. We need a short covering rally, significant short covering rally before we get the crash. You want the rally to go up, turn around, doesn't make it, comes back down, takes out those previous lows, panics, then everybody just panics and sells. That's what we need. I said last week when it broke through the 200-day moving average, the S&P, I said, well, that's good, but there's one more support line we got to get through, and we got to hold it. And I said that's 418. But I said, remember, this week is going to be a big week because we've got a lot more reports coming out, earnings report. And you know what they did last week? Oh, last week, the fake Business News Network, they were really going at it. They were going, wow. And this was, earnings were a disaster. And they're going, wow. Here, let me give you my wow button here. This is what they're doing. I want to get the effect of it right here.
Wow.
Yeah.
Oh, wow.
Wow.
Yeah, wow. See, that's what they're saying about earnings last week, but they're full of nonsense because earnings last week were terrible. They didn't have any good earnings. What they had was, oh, we beat estimates. We beat estimates. They beat all estimates, every estimate. But it was their own estimates. They even beat the estimates as to how much toilet paper they needed on Wall Street that week. They beat those estimates too. It's nuts. They never tell the truth. So I said to my members, I said, look, now let's be careful here. I'm looking for this rally, and they're going to have a rally here, short covering rally, because if you take a look at all the tech stocks, and you see how they've driven them down, and you look at the S&P was down 14%, the NASDAQ down 21%, and the Dow down 12%. And I said, and the housing stocks are down, travel stocks are down, banks are the big ones, tech is the big one. And I said they're going to take the banks and the tech, and they're going to do a short covering rally. They're going to do anything to use this week. They're going to do anything to use this earnings to try to push this rally up. And I said, that's what we want. If you remember, I've been saying for how long this crash is going to happen. And I said, look, last week when we started, matter of fact, the crash, we're in a crash right now. Nobody wants to believe it. We're in a crash. And, and people don't want to believe that. I mean, remember when we went from 2008 all the way up to 2022, and the 10-year yield was at 1.5%, and the 3-month Treasury was not even at 1%. They had that big rally. Of course, interest rates were nothing. But then what happened? Then the market dropped from that January of 2022 to October 2022, went down by, I think, 28%, because what happened? Interest rates started to go up. That's right. Once we got to that January 2022, and the S&P was up 600%, the NASDAQ was up 1,200%, what did I say? It wasn't sustainable. I said that in 2018, January 2018, I said that. this whole rally that we're having up to that point was not sustainable, and they're going to keep running using all this QE garbage, and it's not sustainable. And it wasn't. So rates started to go up. Then the 10-year Treasury from 1.5 started to go up to 1.8, 2%, and guess what happened? January 2022, immediately it wasn't sustainable, and it started to pull back and pull back and pull back. And all of a sudden, when it was pulling back, by the time it pulled back to October 2022, guess what? The rates were at 4%, both on the 10-year Treasury and also on our 3-month Treasury. Yeah, 3-month Treasury. I mean, come on, it was a joke. So that whole rally was a joke from 2008 to 2009 to 2022 because we had to pay $22 trillion for it. Yeah, we had to pay we had to go borrow $22 trillion to get that rally because we had to pay $22 trillion to drive interest rates down to zero. We went through all that last week. So this week I said, look, they're going to try it one more time and keep your eye on that 418. Yeah, 418. So there we are today. And right now we're at 415. And they're still struggling. Let me put my glasses on. Yeah, 416. They're not even at 418 yet. And remember, from January to where we are today, remember that as far as they could go, off that October low, remember they're heading towards, off that October low, they thought they were going to go from 348 on SPY all the way up to 477. Nah, they got stopped at 459. It was over. That was the lower high. They tried it again. Nope, no luck. Came back down, 453. Tried again, failed again, 451. Failed again, 431. And here we are today at 416. Give me a break. So all they're doing is getting excited. They want to do a short covering rally, and let them do it. So the stocks I gave my members today, again, and last week I said, watch the tech stocks, especially Apple and Microsoft. You know them, the 7 stocks, right? They're going to try to rally those, but they're going to probably try to use the banks. Because remember, the banks drive the whole market. The banks drive the whole market. And especially Jamie Dimon now, he's going to cash in his stock. How'd you like that? He's going to cash some of his stock in January. Wait a minute. Jamie Dimon, I don't think, I checked it out. I think I'm right. I don't think he's ever cashed in any of his stock. He never sold any of his stock. So why is he doing it now? Because he knows what I know, okay? He knows his bank is insolvent. He knows the 5 biggest banks are insolvent. He knows that because when you go and take a look at their what they call it, the unrealized losses, they're somewhere around, between those 5 banks, they're somewhere around $280 billion. That's right, unrealized losses. His bank alone has $40 billion unrealized losses. Okay, but they reported last week ago that they had a great profit, $42 billion. What? If you put the $42 billion against his losses, they made no money. And the one that gave me the biggest laugh was Bank of America. They're reporting a big profit, right? And they have 132 billion in unrealized losses. So all these banks, those are the ones that are going to try to get a rally going, okay? Especially Jamie Dimon. Now here we got a little swing trade today going on J.P. Morgan. Let me check out the rest of them here. I'm here. Let's see, Goldman Sachs. Yep, swing trade on Goldman Sachs. I told my members this morning. I said to all my more experienced members, I said, why don't you do some swing trades on the stocks that we trade all the time? We always trade Goldman Sachs, we always trade Morgan Stanley, and we always trade Wells Fargo, and we trade J.P. Morgan. And I said, those are going to have swing trades. The swing trade just simply means the stock is going to go up because of a short covering. People are going to take their profits. And I said the banks will lead the way, and then you'll have Apple and Microsoft and, the same 7 players. That's all this is. But let's watch and see if they can get it not only past 418, we want them to get past the 200-day moving average on the spiders and then hold it. I want to see them go even higher before this market crashes, and I'll tell you why when I get back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi, I'm Phil Grandy of philsgang.com. You know, over the years, I've successfully taught tens of thousands of investors how to navigate the market with confidence. Become a Phil's Gang member and receive the training, the advice, and the software that will take your investing to the next level. You know, I have a team comprised of successful investors, all with proven track records. And Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
To be a successful investor, you need to stay current with the daily changes in the economy and the stock market. Phil Grandy and philsgang.com can be your guide to becoming a better investor. Try the free 10-day trial at philsgang.com for the working investor. From the opening bell to the closing, stay informed with what's happening in real time. The Working Investor Program includes full access to the Phil's Gang website, a morning update on what to look for that day on Wall Street, a market wrap on that day's trading, plus seminars, training, and tools to help you become a better investor. Go to philsgang.com for a free 10-day trial. After that, it's just $59.95 a month for membership, daily updates, training, software, and the best investing advice every day. You can invest with the best. Phil Grandy and philsgang.com. That's philsgang.com. philsgang.com. You want to invest your money and grow your wealth. How do you invest intelligently? Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level. Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy and sell to help maximize profits. Sign up for a 10-day free trial to see our platform in action. Learn more at philsgang.com. That's philsgang.com.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here. And it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
Hey folks, Phil Grandy from Phil's Gang Radio Show. Are you going to let Wall Street control your financial freedom? Are you nuts? Learn what Wall Street doesn't want you to know, especially how to profit in a stock market crash. I'm offering a 10-day free trial to our Working Investor Program. No nonsense, just actionable insights. Don't miss out. Sign up to be a Phil's Gang member and secure your financial freedom. Visit www.philsgang.com today.
That's philsgang.com. philsgang.com. When making wise investment decisions, Phil Grandy has some sound reasons you should join Phil's Gang.
You know, when I started this, they asked me, okay, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works, Join today at philsgang.com.
And at night when the cold wind blows, no one cares, nobody knows.
Welcome back to the Phil's Gang Radio Show. Want to know more about Phil's Gang? Go to philsgang.com or give us a call at 877-600-4264. Now, here's Phil.
JP Morgan announcing in that SEC filing that its chairman and CEO Jamie Dimon intends to sell 1 million shares beginning in 2024.
Sure, as I said, he knows his bank's insolvent. Same with all the big banks, all his pals. Matter of fact, I think I got some numbers here. I'll share them with you. Let me see if I can find them for a second here. Right here. So, Citibank has unrealized losses of $25 billion. Bank of America, $132 billion. Wells Fargo, $40 billion. And JP Morgan, $40 billion. There's one other bank. Which one is it, Willie? U.S. Bank Corp. And that's about $30 billion. $30 billion. So those are the banks. You got to always watch. Those are the gangsters. Those are the banks being helped out. Now, what do I mean by being helped out? Well, those banks, remember, unlike the Silicon Valley Bank and First Republic Bank and Signature Bank, they're not taken care of. Remember, in 2008, when those banks failed, okay, those five big banks I just went over, they were bailed out. Now, they're going to always make sure they have enough cash so they won't run into the problem that Silicon Valley Bank, Republic, and Signature had. They're going to make sure they always have enough cash. So when a depositor comes in, he says, I want to take money out, and I want to buy a 5-month treasury, or 3-month treasury at 5%. Please give me your money. They won't say to him, well, we don't have any money. I'm sorry. Gee, we put all our money into mortgage-backed securities and bonds, and since Paul's been fighting inflation, we've been losing money on those. So we have no money to give you. See, they don't have to do that because they're taken care of. Now, as I told you before, there's 180 other banks, other regional banks that have that problem. But remember, they were scared to death, so they wouldn't put a program together, $2 trillion, so that those 180 regional banks can walk up to the window. Can I borrow some money? My depositors want their money back. Sure, here. But it's owed, remember, in March. This is all a bunch of crap. These banks are insolvent. So now we've got the 25 largest U.S. banks with a lost market cap of $332 billion. We got 15 largest banks, a loss of $46 billion. 5 leading U.S. banks, loss of $109 billion. I could go on and on and on. So last week, when they took those hits, I knew they were going to try to rally these back up. And here we are. So now be very careful. If you're with us and you're a gang member, you're either going to be in J.P. Morgan, Goldman Sachs, Morgan Stanley, or Wells Fargo. Those are the same 4 banks we trade all year long. Told them this morning they could do some swing trades, which means it'll go up maybe 2-3 days, and they'll give it up and it'll make new lows. Because we got a problem. We got a big problem. Look, the economy is struggling. The economy is struggling. And remember, it's Americans say right now that they're struggling. 40% of Americans say they're worse off now than a year ago. And they're buying necessities with their disposable income. They're not buying widescreen TVs. And remember what's going on. Our national debt in 2008 was at $9 trillion. The Fed rate was at 4.2%. Here in 2023, 13 years later, guess what? The debt's at $33 trillion. $33 trillion. That's an increase of 266%. And we're paying a little more, 5%. But we're paying a little more on top of that 4.2 to 5%. But our debt is 266% more. And you want to go in and buy JP Morgan, Goldman Sachs, and Citi as a big investment today? What are you, nuts? If we get 3-4 days out of it, be happy, sing. Because that's all you're going to get out of it, for God's sakes. And now, now think about this. The annual interest rates. I won't even go back to 2008. Just take 2021 to 2023. We were paying $350 billion on our national debt in 2021 interest. Now we're paying $750 billion. Next year we're going to be paying $1 trillion. So between $350 billion in 2021 and $750 billion now, 2033, that's an increase of 114%. And what do they tell us? Everything's going to be just fine? We're in the beginning of a big year-end rally?
I do think we're going to have a year-end rally.
This guy drives me. He's from Wharton. Don't send your kid to Wharton. Or if you go to Wharton, stay out of this guy's class. See, this guy's never made a living. He's never made a living. That's what I can't stand about these professors. They never made a living. Never had to go out and make a living. Most of those professors come from rich families. They've always had a lollipop. They never had to go work. When I grew up, I had to make the shovel before I started to dig to try to build something. These guys, they're all privileged. They never worked a day in their life. They don't know what it is to work. So they have no idea what's going on out there. It doesn't come from a book. Just like I watch cash flow, free cash flow. That's when I set up my charts, when we designed our charts here. And these are our charts. They're not generic. We designed them. We want to design them so that they're following the flow of money, I don't care about all this other garbage. I could care less about all the fundamentals and all. Who cares about all that? I want to know, where's the money going? Where is the money going? And at least our color-coded chart follows the money. And at least when I know it's red, I am, like today, Goldman Sachs is still red on my Pro 2 color-coded chart. Still red. It hasn't turned green, so why would I invest long-term? But I can invest in it for 2-3 days as a swing trade, but not as a position trade. So here we are. We got much more debt now. Tremendous. Our debt is 266% more than in 2008. So what? The interest rate's almost the same. Now, again, as I said, our annual interest is up 114%. Our deficits, there's the killer. In 2008, our deficits were $455 billion. $455 billion. They're 340% more. Our deficits today are 340% more. $2 trillion. And we got these dopes. You got these dopes in the White House that keep spending. So these deficits are going to get bigger and bigger and bigger. So again, if you're jumping on this market today, make sure you're doing it with swing trades, not long-term trades, or you can get hurt. We'll be right back. Join my gang. Please help St. Jude.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. When you listen to the advice of Phil Grandy at philsgang.com, you'll find investing in the stock market makes sense with the right guidance.
People keep saying to me, boy, things are hard, things are tough. Boy, the market's really screwed up. And I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up or why there's continued inflation or why the bank rates are going up. So you understand, especially yields. The most important thing to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com. The feds have raised interest rates again, and AI is the topic of the day. No matter what the financial headlines are, be a successful investor with Phil's Gang at philsgang.com. Take advantage of the free 10-day trial for the Working Investor Program. Phil Grandy has put together the tools you need to understand the stock market with full access to the Phil's Gang website and access to Phil's Pro 2 color-coded charting software. Know with confidence when to buy, sell, and short a stock. Members also have access to Coffee Talk. Every morning at 8:30 Eastern, Phil Grandy talks about what's happening on Wall Street that day. Want to be a better investor? Then take advantage of the free 10-day trial at philsgang.com. You'll find many more features and tools for the working investor. After the trial, it's just $59.95 a month for membership. Invest with the best. Phil's Gang at philsgang.com.
Hi, I'm Phil Grandy, philsgang.com. Are you tired of being lied to about some magical economic recovery that only benefits the 1%? And then when the market does collapse, you're sitting there calling your broker, what do I do? When you should be shorting. Learn how to short the market. Continue to listen to my radio show, philsgang.com. Become a member, only $39.95 a month, and learn how to short.
Don't wait. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. To be a successful investor, you need to stay current with the daily changes in the economy and the stock market. Phil Grandy and philsgang.com can be your guide to becoming a better investor. Try the free 10-day trial at philsgang.com for the working investor. From the opening bell to the closing, stay informed with what's happening in real time. The Working Investor Program includes full access to the Phil's Gang website, a morning update on what to look for that day on Wall Street, a market wrap on that day's trading, plus seminars, training, and tools to help you become a better investor. Go to philsgang.com for a free 10-day trial. After that, it's just $59.95 a month for membership, daily updates, training, software, and the best investing advice every day. You can invest with the best. Phil Grandy and philsgang.com. That's philsgang.com. philsgang.com.
You're not alone. 80% of those in the stock market, just like you, lose money. Hi, I'm Phil Grandy, philsgang.com. Why do they lose? Because they don't know how to short stocks in down market. That will change once you use my patent Pro 2 color-coded chart. It works. The technology works. And it not only gives you an edge on the upside, but Pro 2 will put a smile on your face on the downside. That's right. Check it out. Free 10-day trial at philsgang.com.
When making wise investment decisions, Phil Grandy has some sound reasons you should join Phil's Gang.
You know, when I started this, they asked me, okay, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com. Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com? Or give us a call at 877-600-4264. Now, here's Phil.
The higher real interest rates that we've seen is actually more optimism about growth in 2024.
Optimism. Yeah, that's great, man. We want interest rates to go up because that's telling us the economy's going to grow. See, he got that out of a book. Page 532, section 3. I am so glad I never went to college. I'm embarrassed I never went to high school either, but the only thing that came out of that was good. I didn't go to school. I went to three months. I had 3 months of high school, and I'm glad. I'm embarrassed. I wouldn't tell your kids to do this, but at least I know 101 isn't 2. And thank God I know 101 isn't 2. Because if you think 101 is 2, you'll never be successful in life, okay? You'll never try anything. But think about what he's saying, this idiot. So here's what he's not telling you. Think about interest rates. They're 114% more than they were in 2008. Think about deficits. Deficits are a killer. There's consequences with deficits. And you know where deficits come from? When these idiot congressmen and our president keep spending more money than the revenue coming in. But see, they never have to worry about that. They never have to worry about it. All those guys sitting in Congress are so wealthy, they don't have to worry about it. So deficits are up 240%. Do you understand what that means? The consequences of that? I'll tell you in a minute. Our debt is 216% higher now than in 2008. We were paying 4.2% interest then on our debt. Now we're paying, I think, 5%, 5.3, something like that. But think about that. 114% our interest. Deficits are 340% more. Our debt 266% more. Oh, the banks are going up today, though. Isn't that great? Wow, we're this is it. We're on our way in. And Siegel's telling us this is a good one. Yeah, everything's fine because interest rates are going up, telling us we're going to have good times ahead with yields going up. Unbelievable. There's consequences when there's debt. There's consequences when there's deficits, but they won't tell you. I'll tell you. When you have debt that is 266% higher now than 2008. That means you're going to continue to have higher yields, higher interest rates. That's a consequence. Because you got to fight inflation. Because remember, when they have inflation, how do they fight it? They print more money. And when you print more money, that's inflation. You see? So now, we got, and then now also, remember what debt does. It reduces business investment. We need business investment. We need business investment. That's why from 2008 to 2022, they should all be in jail. Obama, Bernanke, Biden, all should be in jail for starting that QE. It used to be a crime. That whole rally started with those characters. Zero rates. Are you kidding me? Now the bill has come home, and now you're paying for it. So again, deficits have consequences as debt has. Deficits, your consequences, your national debt increases. Your interest payments on the national debt increases. Your savings are reduced. Construction spending's reduced. Our economic growth, look at it, terrible. It's reduced. Remember, it was 6.5%, I think, when we came in under when Trump left, and now I think it's what is it now? I think it's 4.9. 4.9. It was 2.1, and I don't believe a damn number we get from those people. Like last week, right? When the economy grew last week, remember that they gave us that number. That was such a joke. What did they say it grew to? 4.9. Thank you. They grew to 4.9. Are you kidding me? It's the way they put that number together is more crooked than a corkscrew. I mean, it's unbelievable what they do. They even count inventory. I'm not going to go through it. I did it last week. They even count inventory as something good. Are you kidding? So we have all these consequences. But here's what's going on. It kills our productivity. It kills our manufacturing. It kills new orders. Our trade deficit increases. Look at our bankruptcies, up 68% since 2010. Our personal is up 68%. Our small business bankruptcies are up 111%. Our commercial bankruptcies are up 80%. And look at commercial. Our commercial real estate is so much bigger now. And there's really, and all these regional banks are getting hit with the commercial real estate, all the defaults. And think of the folks, mortgage debt. Think about this, 70%. Remember, we have household debt of $17 trillion. $17 trillion household debt. 12 trillion of that, or 70% of that 17 trillion, around 12 trillion is mortgages. That's mortgage debt. That's what people owe. And then you've got about 42% increase in payment delinquencies according to TransUnion. Let's talk about auto debt. 1.6 trillion. We have a 31% increase in delinquencies. That's a 15-year high according to Equifax. Credit cards, a record 1 trillion according to TransUnion. Do you know that consumers are spending 22% more than their wage income by using credit cards? The credit card. That's right. Even though interest rates on credit cards are now, 26%? But here's what I got to say about that. I don't think a lot of that is from new spending. A lot of those numbers we get in, That's because they raised prices. But the fake business news network's not going to tell you that. All of a sudden, they got retail sales. They get all excited. Boy, look, retail sales went up. What they should tell you is, wait a minute, they went up, but they're consuming maybe 12% less or 15% less. It's just that the greedy corporations are pushing up the cost. They're not eating any of this. They're pushing it up. It's amazing. So, in some cases, the fake business news network, remember, is doing a lot of the dirty work of the advertisers that you see on the fake business news network. They're creating, I mean, again, I'm saying, sure, some of that people are out spending, they're using their credit cards because they believe the fake illusion the fake business news network puts out there. They create an illusion of prosperity and optimism and belief and hope. You hear them. You hear them. Everything's okay. Everything's fine. You know, everything's wonderful, right?
The economy's doing all right.
Yeah, doing all right. Not bad. Remember Yellen?
The economy is remaining strong.
Yeah, see? So some people are out there, yeah, I might as well use my credit card. I'll be able to pay it off. What are you, nuts? Look, remember, when we had, let me give you, we had the, this is interesting, credit cards. Do you know that 62% of people that have credit cards roll over their balance? They never pay it off at the end of the month? 62%. So that's what, 36% who do pay their balance off at the end of the month? That's a killer. Do you realize the debt? 38%. The debt that they're carrying on these credit cards at 26%. Are you nuts? Now something must be wrong. Something must stink. If Fisk downgraded our credit rating, remember they downgraded, I think it was in July. Now our country has an annual net loss. I got to double check these numbers. I don't think they're right, but they're probably close. 1.2 trillion, a negative net worth of 21 trillion. I got to check those, but they got to be somewhere in that neighborhood. But our debt keeps rising. That's true. 1.5 billion every 24 hours. So when you go to bed tonight, by the time your feet hit the floor tomorrow morning, we owe another 1.5 billion. What are you, nuts? And wages are declining. They keep declining. They're not keeping up with inflation. So what do you do to fix this? Join our gang. At least, if you don't have time, why don't you join us and follow the spider so you can short. You can short some of this. We'll talk more about that when we get back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. Become an expert investor. Here's Phil Grandy of Phil's Gang Radio Show.
If you want financial freedom, then don't let Wall Street hold you back. Discover what they are hiding and how to thrive, even in a stock market crash. Unlock these secrets with a 10-day free trial to our Working Investor Program. Real strategies, no fluff. Take action right now. Come on, become a Phil's Gang member and reclaim your financial freedom. Just visit www.philsgang.com. Hi, I'm Phil Grandy of philsgang.com. You know, I've been doing this business of trading over 55 years. God, they make it so complicated. It doesn't have to be. The best way to learn is to follow me, my actual investments. That's right. When I buy a stock, you follow me. Do exactly what I do. That's the best way to learn.
Check out the free 10-day trial. Learn more at philsgang.com.
Be my co-pilot at philsgang.com. Do what I do.
That's philsgang.com. There's nothing better than learning from the experts, especially when it comes to investing your hard-earned money.
Hi, this is Phil Grandy, host of Phil's Gang Radio Show. At Phil's Gang and philsgang.com, I have one goal in mind: to help you become a skilled investor in the stock market and find your financial freedom. With the Working Investor Program, you will learn what Wall Street doesn't want you to know. You'll develop skills like selling short and how to profit, even in a stock market crash. This is the real world investing information that will give you the edge to be successful in the stock market. No gimmicks, just real strategies, and I'll make the offer even better with a 10-day free trial of the Working Investor Program.
Once you're in the gang, you're in the know. And with the free 10-day trial of the Working Investor Program, there's no reason not to give it a try.
Become a Phil's Gang member and reclaim your financial freedom. Go to philsgang.com. That's philsgang.com.
Are you a stock market investor without all the information?
What are you, nuts? Market's going up, market's going down. We're getting all this bad information.
How do you invest intelligently? Phil Grandy can show you.
If you want real information and you really want to know what the market's going to do and you want the truth, go to my site, philsgang.com, and also listen to me on my radio show every weekday at 3 o'clock Eastern.
Phil's got the answers at philsgang.com.
That's philsgang.com, where you get the truth and you get the information you need about the market.
When you listen to the advice of Phil Grandy at philsgang.com, you'll find investing in the stock market makes sense with the right guidance.
People keep saying to me, boy, things are hard, things are tough. Boy, the market's really screwed up. And I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up or why there's continued inflation or why the bank rates are going up. So you understand. Especially yields. The most important thing to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com. There's a lot of noise out there in the financial world. Bank failures, interest rates, bonds versus stocks. It's a lot. That's why it's important to find a voice of reason that can guide you through these volatile times. Phil Grandy at philsgang.com is where you can find honest, helpful guidance to successful investing.
Get the knowledge and understand how the market really works.
And for a limited time, you can join Phil's Gang free for 10 days.
philsgang.com. That's philsgang.com.
Welcome back to the Phil's Gang Radio Show. Want to know more about Phil's Gang? Go to philsgang.com or give us a call at 877-600-4264. Now, here's Phil.
And welcome back to Phil's Gang. Okay, I'm going to play a clip from this generation's Doris Day. You'll hear her. Her name's Becky Whiff.
I was looking at rates at this point, even if they don't do anything else to raise it. You've got credit cards north of 20% right now. You've got mortgages 8%. You've got auto loans north of 7%. And you've got student loans on the federal level at 5.5%. I mean, that sucks up a lot of the spending power. And it's hard to think that that is not going to have a pretty major impact.
No.
Wow. Oh,
Yeah.
wow.
I can't believe we got some truth from that. Maybe she's so embarrassed from the rest of the year that she's trying to make it up. But that's the point. You got. Here's what I teach. It's an old trick I learned years and years ago. Let's take Goldman Sachs. Goldman Sachs, we got a swing trade on that, and I'll tell you why it's a swing trade, and I'm not investing in it. If we take the stock's high, I'll take the high back on July 26 at 360, and the low of 268. Now, if I split that in half, that would be, what is that? So 335. So let me say it again. So if I take the high and I draw a line, if you're following me on YouTube, right here, I'm going to draw a line right there. That's the high, okay? Draw it over. Then I'm going to take the low, draw a line right there. And the middle, if I go 50%, it's my 50% rule, that brings me to 335. 335, okay, right here, all right? So what does that mean? Well, you got to understand how the business works. Now, to get from where we are today, 301, up to 335, you know you'll get some help with that. Because everybody who shorted it from 360 down to, let's say, 268, they got to cover their own shorts. They got to buy the stock. They have no choice. So that will push the stock up somewhat, okay? And then you've got the tourists who don't know what the hell they're doing. the buy on the dippers, they're going to come in and buy on every dip, right? But do you realize, even if you get halfway to 330, that's unbelievable. But to get the rest of the way, do you know how much overhang that is? Do you know from 330 up to 360 on Goldman Sachs, how many sellers are sitting up there? How many people should, oh my God, if I just get half my money back. So the next time you think that your stock is going to go straight up, use the 50% rule. And at least with the 50% rule, you'll have you can apply some common sense, okay? It's not going to work. Today is a short covering rally. Today, you use what we call a swing trade. You're in for 2, 3, 4 days, whatever the momentum is, okay? And then you're out of there. You're gone. And then when it makes a new low, let's say, for example, Goldman Sachs goes up 3, 4 days. And when it takes out its low, that's when you want to short it again. That's when you want to short it again. When it takes out its low around 289. It takes out its low at 289. And we've had a nice short on Goldman Sachs. We got into short at somewhere around, I think it was around 308, something like that. So, again, please remember, this is nothing but a short covering rally. All right, look, join the gang. Go to my site, philsgang.com. Hit where it says subscribed, okay? Or get started. 10 days is free. You'll be able to use during that 10 days what we call our Pro 2 and Pro 1 color-coded chart. And it's our chart. We built it. We designed it. We follow the money. We could care less about fundamentals, okay? We use the money, follow the money, and even more so now, just follow the money, okay? And it works. We're going to teach you how to sell short. How can you make money in a market when you don't sell short? Would you buy a car that has forward but no reverse? No, that's pretty silly. It's even more silly with a stock. When a stock is going up and you get out, right? Get me out, right? This blows my mind. Stock's going up. Get me out. I think it's going down. Get me out. Well, wait a minute. If you think it's going down, I get it. But why don't you turn around and just short it? If you're getting out because you think it's going down, short it. Why are you going to go look for another stock? What, all those other stocks didn't go up? Only your stock? So you're going to so let's say your stock went up 15%. You don't think the other stocks went up 10 to 15%? So you're going to get out of your stock that maybe if you're lucky you bought wholesale. Now you're going to buy a stock at retail. What are you, nuts? You've got to learn how to sell short. And in 10 days, it's free. And you're going to learn during those 10 days how to sell short and how to execute a buy position properly. Now, at the end of 10 days, you decide, this isn't for me. It takes too much time. Then what you do is just stay with us with the spiders. Spiders. That's all. All year long, just stay with the spiders. We tell you when to buy it. We tell you when to short it. That's simple. 3 of us are overseeing the spiders. We're sending out alerts all day long on the spiders. Matter of fact, we just started a brand new group on the spiders. So check that out. If you feel I don't have time, or even if you don't have, I just don't want, I don't get it. Well, the spiders is easy to get. You haven't got to do a thing. You just got to get an online broker so you can make your transactions. But we'll guide you all during the day. During the day, we tell you what's going on. But look, this market is in very, very deep trouble. Nobody wants to admit it, but it is. In this market, as I told you, I believe we're going to go back and we're going to visit the March 2020 low. That's that was the what they're calling the pandemic crash. Remember that? That's where I think we're going to go. What we do want right now, though, is we don't want this. Remember last week I've been saying this. God, I hope this market doesn't break right now. You want to have one last short covering rally. If they can get this rally up as close as they can, to around, I'd like to see them hit around 450. 450, that'd be great. And then fail. And then when it fails and they take out the low of around, the last week's low of around, I think it was 411, panic will hit. Now, what you got to watch now on the spiders, the S&P, SPY, is see if it can make it through the 200-day moving average and hold. You got to understand, in January 2022, after a 13-year rally, it was all phony. It was all phony. It was, hey, anybody could have rallied the market if you got $22 trillion, but you're on the hook for that $22 trillion. That's right, $22 trillion, they went. And remember how this all started. Few people understand. This was the Obama, Biden, Bernanke play from 2008 to 2022. Remember, this was their play. Remember, the market didn't rally due to productivity. It didn't rally due to earnings. Instead, they replaced productivity and earnings with financial engineering called QE, which is Zimbabwe Tawi for we're going to screw you, QE. So Obama and Biden Bernanke administration, instead of rebuilding a sustainable economy and a sustainable stock market and using business investment, using increased productivity and work hard at it, nah, they didn't want that. Instead, they would use financial engineering. They would drive rates down to zero by putting us into debt, $22 trillion, and that would be used to push rates down, keep pushing them down. And then the CEOs would go out, who had the popular 7 companies, the magnificent 7 companies, and the CEOs, what would they do? They borrow the money from the Fed near zero, and then the CEOs would be able to reduce the number of outstanding shares the company had. That's called stock buybacks. And what happens when you reduce anything that people want? If you reduce a bag of apples for sale, or you got 10 motorcycles you're selling, now you got 2, the price goes up. It's the same with shares. So by reducing the shares, the price went up, earnings went up, the stock price went up without adding to top line sales, without adding to margins, without adding to profits, without adding to earnings. Because all they did is lower the amount of shares. What a deal. That's called QE, or prosperity without profits. And now it's a big confidence game. That's all it was. And now you're paying for it. So please learn how to sell short. We'll help you. And all we ask at the end of 10 days, if you leave, don't stay with us. It's free. That's okay. But please help St. Jude when you do make some money. Hey, we'll see you on the chart.
You have been listening to Phil's Gang with your host, Phil Grandy, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.